Okay, so in this slide, we'll further explore the part down below the contribution margin. So in this case, the fixed cost is 80,000, right? So each month, the RBC must generate at least 80,000 in total contribution in order to have a break even. Break even means which is the level of sale at which profit is zero. It means you have no profit, no loss situation. So in order to have a zero net operating income, you must earn that much contribution margin which is equal to fixed cost. So that is the basic crux of this slide, that the contribution margin occurs break even occur where CM is equal to fixed cost, right? So this slide further adds some kind of taste regarding changes in our units or volume of the activity. So here, if the RBC sells 400 units in a month, it will be operating at a break even. How? We know that 500 is the price of our bicycle. So where this 200,000 came from? 500 multiplied by 400 units. This 200,000 came from by multiplying 500 into 200,000. Where this 120,000 came from? You just multiply per unit variable cost, because the behavior of variable cost, we can use that on a per unit basis. Why? Because behavior of variable cost is like a constant when it convert into per unit variable cost. So we can rely on the 300. So we sold 400, so 300 multiplied by 400, this amount came from 120,000 by multiplying 300 variable cost multiplied by the units 400, right? And how much is the contribution margin? 200,000 minus 120,000, 80,000. So here, so that definition or that concept is proved, that break even occur, which means no profit, no loss, right? Where CM is equal to fixed cost, right? So if the RBC sells 400 units, it will be operating at break even. Why? Because CM is equal to fixed cost. Okay, so this slide basically proved our second definition of contribution margin. So let's talk about, so you can see that if RBC sells more than break even, our break even was 400. So the definition was that after covering fixed cost, let me write it here, the complete. So here, what was the second definition of contribution margin? It was after covering fixed cost, whatever left in the contribution margin directly goes to net operating income. So the understanding of this slide is to prove that the additional contribution margin by selling one more unit here, if you sell one more unit is sold of 500 each with 300 variable cost. Answer is 200, right? You can just see it, this analysis here as well. So that directly goes to our net operating income, right? So let me just explain one more time. So if the RBC sells one more unit of bike, so net operating income will be increased by $200, right? So where this 200,000 and 500 came from, so you multiply the price of one unit of the bike is $500, and you sell for 1 unit. So this came from here. The answer of the contribution margin is 200,500 minus 120,300. Answer is 80,200. 80,000 is our fixed cost, so the amount left is 200 is our net operating income, right? So from here we prove that whatever left after covering fixed costs, the amount left on the contribution margin directly goes to income, net operating income. Okay, so for those who cannot understand this concept, so we do not need to prepare the income statement to estimate the profit at a particular sales volume. So simply multiplying the number of units sold above the break-even by the contribution margin per unit, we can find out easily the increase in net operating income. So here, if our BC sells 430 bikes, right, and we know that 400 is our break even, right? The beauty of this contribution margin approach is that we do not have to make the whole contribution margin income statement, which is we don't have to write sales and then we less variable cost. We find our contribution margin and then we minus the fixed cost and then we find out the net operating income. It's time consuming. So in order to find out directly, so we know that the 400 is our break even, and we know how much we sell above our break even. 30 more bikes, 30 units. We just multiplied 30 with our 200 contribution margin, so 6,000 will be added to net operating income.